At Minds and Money London, we're with Ian Williams, Chairman and CEO of Charteris Portfolio Managers. So Ian, you have the top performing fund out of 6,000 funds in the UK. Congratulations. So talk to us about how you managed to do just that.
Okay, well, all the top funds over the last year have been gold and precious metal funds, but our fund predominantly invests in silver, and silver's done much better than gold. So it's pushed our fund up to the top of the league relative to the funds that invest purely in gold, which in turn have done much better than, pharmaceutical companies or, whatever.
Exactly. Now tell us some fundamentals in silver.
Okay, it's a billion-ounce market supply, billion-ounce market demand. On the supply side, which we think is the most important, 35% of silver comes as a byproduct of lead and zinc mines. Lead mines are being closed down, and which is taking a lot of silver off the market potentially. 32% comes from primary silver mines. So on the supply side, we can see the potential supply of silver in the next 1 or 2 years falling quite sharply. Right. On the demand side, again, 1 billion ounces of demand. If you go back 10 years, only 7 million ounces went towards solar panels. Last year, I think it was 60, 70 million ounces. Forecasts seem to produce next year or two up to 150,000 ounces. So that's where the big growth area on the industrial side is with the manufacture of solar panels. You need 2/3 of an ounce of silver to make one solar panel, and you can't substitute anything else. And the world's going on a solar panel boom.
Right. Now, where do you see the silver price going for this time, maybe next year?
Okay, well, we think that over the next year, 18 months maybe, both gold and silver are going to retest their highs. And that's where it gets quite interesting, because if gold retests its highs, it has to go up about 40% from the current level. Silver retests its highs, it's got to go up 300%. So you need a much bigger rise in silver to get it up to its old high than it do into gold. But we think if gold hits its high, silver will hit its high as well, like they did last time.
And what are your tips to invest in a silver company for the average investor?
Okay, well, with our fund, we can only say what we do for our fund. 80% of our fund is in Canadian domiciled mining companies, quoted on the Toronto Stock Exchange. And most of those are mining silver in Mexico and other bits of Latin America, but primarily Mexico.
So why Canadian companies?
Well, Well, I hesitate to say because of NAFTA, because our new president-elect might not have NAFTA in. But one of the reasons we originally liked it is because of NAFTA. You've got Canadian corporate governance, which is on a par with the best in the world. But you've got the North American Free Trade Agreement, assuming it's still going to exist, that protects Canadian investments in Mexico, because the Mexicans aren't going to expropriate those mines all the time. You've got NAFTA. So Mexico is a great jurisdiction in terms of quality, in terms of infrastructure, in terms of cost. I mean, Mexico scores very highly on virtually everything, but the majority of the companies mining silver there are Canadian companies with Canadian management.
Now, besides just going off on what we just talked about, besides the potential of scrapping NAFTA, how does the Trump administration affect how you invest, your strategy?
It doesn't affect it at all.
No?
I mean, we have our own proprietary cycles model, and it was predicting a big low in all commodities around about the start of the year. When you get these commodity cycles bottom, gold and silver tend to be first leaders. They're the first ones that go up, and about 9 months later, you tend to get the base metal markets move up. And when the base metal markets move up, that's when the bond markets collapse. And 9 months after the gold and silver went up, that's what's happened. It just happened to coincide with a presidential election. So people are saying, oh, it's all down to Trump. Superman Trump has formed these enormous moves, made copper go up 20%. We think it was going to happen anyway. It was bang on cue 9 months after gold and silver, which
was at the right time.
If you look back at all the previous commodity cycles in history, that's roughly what's happened before.
Right. Well, lastly, talk to us about the panel discussion you were just on. Any key takeaways that you had from there?
Not really. I mean, the one thing that possibly should have got mentioned that didn't was that another point in favor of silver over gold is that every central bank in the world has big stockpiles of gold in their vaults. No one owns silver. There's no stockpile of silver anywhere. So we're buying to come into the market. you could find that central bank somewhere could sell some gold to meet that demand. There's no stockpiles of silver around anywhere. There used to be, but they've all run down. So it's much easier to see a squeeze develop in the silver market than the gold market.
All right. Well, thank you so much for the interview.